Hello, everyone, and welcome to another episode of Bull Run with Angel. Today's episode will be focused on navigating the market and how tariffs and agricultural issues impact industries. Disclaimer: I am not a financial advisor. The content in this video is for informational purposes only. It should not be considered financial advice. All investment decisions are made at your own risk. Please conduct your own research, and if necessary, consult with a licensed financial advisor before making any investment decisions. Let's start with the breaking news from CNBC. Trump tariffs on Canada, Mexico, and China begin Saturday, White House says. Up next from the Texas Tribune, Texas dairy, poultry producers grapple with bird flu. Now today, what we're going to be doing is we're diving into the latest news and its impact on various sectors. Based on the recent headlines, here are the industries that might face some negative effects. Number 1, consumer staples and agriculture. The Texas dairy and poultry industries struggle with bird flu, could lead to reduced supply and higher demand. Number 2, industrials, manufacturing and trade. Number 3, consumer discretionary. If tariffs increase the prices of goods imported from China, Mexico, and Canada, consumers may reduce their discretionary spending. Number 4, materials. Companies involved in manufacturing raw materials, such as steel, aluminum, and chemicals, could face higher costs or reduce exports due to tariffs impacting profitability. Number 5, retail and supply chain. Retailers dependent on imported goods may experience higher costs, potentially also affecting their profitability. What we're going to do next is dive into specific stocks within the sectors that may face challenges based on the recent developments. And before we dive in, I would just like to take a moment to say thank you for tuning into the latest updates with Angel the Investor. First, consumer staples and agriculture. We're going to start with Tyson Foods. We know that Tyson Foods is a major player in the meat processing industry. Tyson could be impacted by disruptions in poultry supply due to bird flu outbreaks. Next up is Pilgrim's Pride. As a leading poultry producer, Pilgrim's Pride may also be facing challenges from avian influenza affecting its operations. Hormel Foods. Known for its meat products, Hormel might experience supply chain issues stemming from livestock diseases. McDonald's. As a global fast food chain, McDonald's relies heavily on consistent meat supplies, and any disruptions could affect its menu offerings and profitability. Cisco, a major food distributor, could face challenges in sourcing poultry and dairy products, impacting their distribution. Next up, number 2, industrials. We'll start with Caterpillar. As a manufacturer of heavy machinery, Caterpillar may encounter increased costs due to the tariffs on imported components or raw materials. Next, Deere. For agricultural equipment, Deere could be affected by tariffs, impacting the cost of parts sourced from these tariff-imposed countries. Next up is 3M Company. With a diverse product range, 3M might see cost increases in raw materials due to tariffs affecting its profit margins. Next, consumer discretionary. We're going to focus more on the automotive sector, starting with Ford Motor Company. As an automaker, Ford could see increased costs for imported parts, potentially leading to higher vehicle prices and reduced consumer demand. Next up, General Motors Company. Similar to Ford, GM may also experience cost pressures from tariffs on imported components, affecting its pricing strategy and sales. Next up, Nucor. As a steel manufacturer, Nucor might experience similar dynamics as U.S. Steel, balancing against international challenges. Next is Dow Inc., a major chemical company. Dow could be impacted by tariffs on raw materials and potential retaliatory measures affecting its global supply chain. And last, Sherwin-Williams, known for its paints and coatings, may face increased costs for chemical components during this time. Next up, retail and supply chains. We're going to start with Walmart. As a major retailer, Walmart imports a significant portion of its merchandise, and tariffs could lead to higher prices for consumers. Next up, Target. Similar to Walmart, Target may face challenges from increased costs of imported goods. Last but not least, Amazon. As an e-commerce giant, Amazon's extensive supply chain could be disrupted by these tariffs, affecting both their product pricing and sales. Now, what does this mean for us as investors? Well, as investors, it's crucial to monitor how these companies respond to challenges. Factors such as supply chain adjustments, pricing strategies, and financial shifts will play crucial roles in their financial performance. Investing based on current market news requires a strategic approach. Here are some steps you can take to make informed decisions in the market. First off, always make sure that you stay informed. Keeping up with the latest news and developments in sectors that are likely to be affected by current events will help you make informed decisions. For example, if you're concerned about the impact of tariffs on industrials and materials, consider investing in sectors less likely to be affected, like technology or healthcare. Number 3, consider defensive stocks. You may want to invest in companies that are less sensitive to economic downturns, such as consumer staples and utilities. These sectors tend to perform better during economic uncertainty. Number 4, look for opportunities in affected sectors. While some sectors may face challenges, others might benefit. For instance, domestic steel producers might gain from tariffs on foreign steel. Identifying companies that could benefit from the current economic environment is key. Number 5, use advanced tools. Investment tools that analyze vast amounts of data and identify patterns can assist in making more informed decisions. Number 6, monitor company reports. Keep an eye on how companies are responding to challenges like tariffs and supply chain disruption. Companies that are proactive and adaptive may be better positioned for long-term success. And number 7, always remember that you can consult with a financial advisor. They can provide personalized advice based on your financial goals and risk tolerance. And as always, remember that investing carries risk, and it's important to do thorough research before making any investment decisions. Thank you again for tuning in to today's episode of Navigating the Market: How Tariffs and Agricultural Issues Impact Industries. Because remember, we want to make money no matter what position the stock market is in, whether it's bullish or bearish. We still want to be successful.